Happy New Year and welcome to my channel. I am Robert and I talk about everything automated algorithmic trading or simply algo trading. I wanted to open up the video for the year talking about one of the most important tools that I use in my own personal trading. I use order book analysis on a constant basis and I spend at least 2 hours a day looking at the order book and studying exactly what the market is doing. This tool has become such a significant part of my daily trading regime that it really has opened up a whole new way of looking at the market. So that is what I'm going to spend this video talking about. So let's get straight to the VPS and talk about the program, how to use it, and just exactly what you actually get to see. Okay, we are now in the VPS, and you need to be running the latest version of Jackrabbit Relay for this to work properly. So let's get into the assets I trade on a regular basis. And in fact, this program is what I use every single day that I do my short videos on what the market is doing. So we're going to load the program, and I'm going to look at the market at a short direction. If you want to trade long, then you just replace the word short with long. Press enter, and it will soon load the data. And here is the default view of the market. Now I've had this program running for quite a while, so my data collection is fully saturated with 48 days or 172,000 data points. So if you just started the program, you will literally be seeing it grow over time until it reaches its saturation. First, let's get to the very basics. Let's go to the volume of the asset. That is done by pressing the V key. Now, because the program downloads the entire order book, it can take a few seconds to respond because it has to actually physically finish downloading the order book that was already in process. And for this particular exchange and account, downloading the entire order book takes roughly 5 seconds. Now for volume, this is the sell side, this is the buy side. This would represent support, this side would represent resistance. And you see, of course, the price of the resistance level according to the order book, where the highest percentage of volume within the order book is currently at. So right now the order book itself shows 1.0965 at 0.53% weight. So this is where the order book actually is at the moment, and this information gets updated in near real time. Meaning it's got to download the data, and that takes 5 seconds a cycle. So after it downloads the data, it calculates and displays the information, and it goes back and gets the latest update. And you will see your asking price reflect that up here, as we just did, where price changed appropriate to the latest download information. The yellow bar or yellow color is a reminder that we are looking at this as a short side. So now, let's talk about one of the most important aspects of this program: precision. Right now the program, it shows 4 digits after the decimal, or basically the pip level. What I normally prefer when I'm doing my analysis is to see only 3 digits. And that can be done with the program using the number keys 0 through 9, or 1 through 0, whatever your keyboard has on it. So I'm going to press the 3 key. We're going to wait for the program to go through the process. And now we have 3 digits after the decimal. And now we can see a much bigger picture of the market. The volume is now 1.3% at 1.097. So we can see now the weighting as it's aggregated all of the 7.0 through 7.9 pip levels into 1.97. The same holds true for support. And we see right now that support is roughly 7.3% with a price value of 1.069. Now this is actual order book volume. This is where all of the buys are weighted and sitting at. And that is important because now you have a natural support and resistance within the order book, or supply and demand. And right now we see there is more demand than supply. The demand is to purchase from this price, whereas the supply is to sell at this price. Now, because the supply is so much less than demand, you can see that the price can be expected to go up a little more, at least from the volume side of it. But there is actually more to be looked at in terms of nuances and details. And we need to look to see if there's any kind of manipulation. And that is what this program really does a great job at. So let's go and look at what happens if we look at the market with a precision of 2 or 2 decimal places. So by pressing the 2 key, we wait for it to update, and now we see more and more of a larger picture of the market. We also see some manipulation. So right now, the rough 1.07 range is 13% of the order book buy side, whereas the 1.10 range is roughly 5.3% of the sell side. Again, supply and demand. Supply is significantly less than demand. But we see something more interesting here. As we move down the price table, we see that there is a huge amount of demand. In fact, 2.73% at 0.96. So we see within the order book that 2% of the order book is for below $1 of the Euro USD. Now this is manipulation. This is where somebody has deliberately placed a limit order in the order book, and that could be one or more people, to try to drive price down. That is to indicate that there is a demand at this level that may or may not be there. And we're going to see how to actually adjust for that and compensate for that kind of manipulation. But equally on the sell side, we see there's manipulation as well for where people want price to go up to. That is, they want to drive the price higher. So you see where the bulls and the bears, average everyday people and institutions and banks, are manipulating the market in a way to drive prices up or down based upon the weight of the order book. But now let's go down to 1 digit or 1 precision, and let's take a slightly bigger picture of the entire market. Now remember, this is all strictly just volume. We haven't gotten into the other nuances of the market. And here we see even more manipulation. We actually see people priced at zero, meaning 0.1% of the market actually wants Euro USD to collapse to zero. That is a huge impact. But on the other side, we can see where people actually have orders in the book for $8.1 on the sell side. Then we get to this weird stuff here, where somebody actually placed a buy order at this insane level in the order book. This is all pure manipulation. And we can see that the weight of these manipulative prices are roughly 0%. You're probably looking at 0.001% or some other kind of really weird small number. But nonetheless, you can see at this level nothing but pure manipulation. How people or institutions are simply trying to hijack the market through insaneness. This is where things really take a whole new level of trading. But let's go back to precision. Now that we see how the order book itself really shows manipulation, and let's find out how to see around that manipulation. So here we are for the order book, looking at a precision of 2. It's a pretty wide angle, so we can see a lot of the lower prices as the market moves downward into what would be considered a reasonable level of expectation. And we can even see in terms of the market moving upward for a reasonable level of expectation. Meaning you see there are some valid entries within the order book. So now let's actually take and see where price has been for the last 48 days, since that is the data I have collected. So we're going to go to frequency counting, and that is with the F key. Now this is where price has actually been at in the last 48 days. And where price has been at is where price is likely to return. And we can see clearly price has not been below 1.07, and price has not been above 1.11. And we can see where this price is in relation to the number of times the market has been sampled, 172,000 for this program, for my system. Now let's go to what I normally use when I evaluate the market. 3 precision, or 3 digits after the decimal. This is where I spend most of my time looking at what the market is doing, because it gives me enough information that I can see a reasonable level of market activity. And we can see clearly the price has not been at 1.068 in roughly 2 months. And it has not been at 1.115 at all. Also within 2 months. Now you can look at a table or a chart to compare that for the daily or the weekly to see how long it's been since price has been at either of these levels. But it has been quite significant. So frequency counting is where you actually measure where price has been. And we can see that this particular price, 1.095, price has actually been here 14,000 times in the last 48 days. And here at 1.090, price has been here 7,435 times. So you begin to see both from the buy and sell side where the buyers are likely to be and where the sellers are likely to be. So it gives you a good range of support and resistance. That is, we can see that while some sellers will expect higher prices, most sellers are happy with this price. And we can see that while some buyers want lower prices, we can see that most buyers will accept this price. So we have a point of view of the market. We can see now a viable, legitimate market aspect. Now, what happens if we take volume and frequency and combine the two to a single weight? Well, that's what we get when we press the W key or when you bring the program up by default. So now in looking at the actual weight, that is volume times frequency, the combination of where price has been and where price is actually weighted in the order book through buy orders and sell orders, we get what I see every day when I make my decisions, when I make my videos. We see that right now support is at 1.089 and it represents 11% of the order book. And this is on the basis of where price has actually been, where buyers have actually placed their orders and gotten them filled. And we see that sellers are quite happy to accept 1.095, and that represents 13% of the order book. But we can also see that slightly lower, 13.12% of the order book is accepting a 1.097. So now we see where the order book is likely to go next. That is, we have a range of what price is acceptable, and we can see what the order book is going to do, and that the bulls are likely going to try to push price higher than what it is at the moment. And we see from the weighting that the upper range of the market is 1.115. Now, if you're into any kind of mean reversion techniques, this pretty much tells you that the closer the price gets here, the less likely it's going to go higher. Now, that's not an absolute, because as we saw last week, the bulls did drive price higher from 1.10 to 1.115. So price can be driven higher, but you are likely to see a statistical advantage. The advantage that this represents is the higher price goes, the more probability it's going to correct downwards. Whereas the lower price goes, the more probability it's going to correct upwards. So we have a lower range of 1.068 and a higher range of 1.115. By knowing the range, we know where the market is actually looking for price. Through the combination of volume and frequency counting, we can see whether participants are interested in getting into or out of the market simultaneously. And of course, if you step down in precision, let's say to 2 digits, we will get more interesting information. Now we can see some very interesting information. and that is that the market is weighted at the 1.10 range 45% of the order book, whereas only 5% of the order book is at the 1.07 range. So here we begin to clearly see who has control of the market. And if you followed this morning's short, you can clearly see that the bears currently hold the market strongly. And we can see that just by looking at the combination of volume and frequency counting, which side the order book is weighted on. And we saw within the YouTube video this morning, price has dropped significantly, and price is likely to drop even more. We can see the distance between the expected value of where the order book is currently weighted and the ticker value, and how that differs from the ticker value and the expected lower boundary or the lowest level of buy orders. So now you see very much just how much this program can benefit your trading by looking at different levels, by looking at different combinations of volume, frequency counting, and then finally the totality. For example, in this case, where the ticker is showing up as the same, I would go to the frequency counting to give me a better estimate of what I am looking at. That is, I would actually begin to compare numbers and get an assessment of just what I am going to try to do for my own trading. So by using these tables as comparatives of each other and looking within the different frameworks of the data these tables represent, you can get a sense of where the market is going in a real-time context. That is, this information is updated continuously as long as the program is running, and you will see this data change appropriately as the order book itself changes, as its participants buy and sell every single second of the market. So as you progress with your daily trading, do not neglect the information the order book gives you. We know the market is bearish, both on the chart and in the order book. We know the price is expected to go lower. And we have a clear and concise consensus of where the participants want price to go. The buyers want to buy at or below 1.089, while the sellers want to sell at or above 1.095. So through this combination, we can see the range. And if you use a technique like grid trading, then you definitely need to know where your range is. And this is what my own grid bot relies on. I know where the market is. I know where the market has been. And from this information, I have a rough estimate of where the market is going to go. Now, this isn't a guaranteed prediction, but it helps me figure out what my upper and lower ranges need to be and how much room I need to give my grid to grow and fluctuate with the market as it moves consistently and steadily. So through this kind of research, you gain a deeper understanding of where the participants are actually in the market at. Whether it is the combination of volume and frequency, or strictly frequency counting of where price has been, where you actually see how many times price has been at a specific level. Or if you just want to see the raw order book as it is, showing the buyers and the sellers and where the most limit orders are, you also have that information at your fingertips. And you could see clear and present manipulation within the order book, where you can see exactly where people are trying to game the system, whether it's a large number of individuals or an institution trying to create fake outs. All of it is available in this tool. So please take the time to look at it, study it, research it, use it in your own trading, and it can help you make better informed decisions about how to protect your own investments. If you like this video, please give it a thumbs up. If you're not subscribed, please subscribe to the video. If you have any comments, please let me know. Share them. If you have any questions, please ask. Thank you for watching. Until next time.